Hello traders, Gary Wagner here, just after 10 o'clock in Honolulu, 3 o'clock in New York. It is Tuesday, December the 8th, 2015, and this is the Daily Report for Gold and Silver. We do have a mixed bag in the precious metals markets today, with gold trading slightly higher and the rest of the complex off on the day. First, the gold up about $2.50, 1073. 1074 in that area. We have seen a trade to a low of 1067.87, a high of 1079.18, and as I said, currently up about $2 to $3 on the day. Now, palladium, that is trading lower today, off about $5 at 550. Platinum also trading under pressure today. That is off about $16 at 847. And finally to silver, silver trading off slightly, off 7 cents at 14.15. So traders, if you recall from yesterday's show, we did implement a short trade or a short strategy in the market. Traders taking that call were in at roughly 77, 1077, 1078, with the market trading roughly 1073, 1074. First chart that I do want to take a look at this morning is going to be a daily chart. Let's go ahead and pull that up. And what it's going to do is really earmark some key levels that we want to look at. First, I want to look at current resistance area in the marketplace and where I think the market will not have the ability on the upside to go through. And should it go through there, that would be a different ballpark. First of all, we're short at 78. We have stops sitting just above these highs right here at about 88. So you can see that right here. And so we're pretty well protected. However, my sense is that prior to it getting to that point, we've got a very, very strong band of current resistance. Now, this band right here used to be a support area, and you can really characterize it looking at July and August, of course, of this year on this daily chart. When the market came down and first hit these lows were roughly at 1080. We had some lows that came in. I believe it was this one right here that came in at around 1071. But there's absolutely no doubt we had some tremendous support in this area. Market, of course, takes off from there. We have a trade within a range until it breaks back below here back in November of this year and comes down to a new low. Now, with that being said, my sense is that this area right now is pretty critical. In other words, 1080 is an area that we need to see whether or not it can break through. My sense is it will not. And obviously, that's one of the primary reasons that we are short in the market, is that I think the pressure is to the downside. And I think it will continue to be to the downside for the next couple of weeks at least. Now, one of the primary reasons I believe we could see a continuation or gold under pressure is really based upon the U.S. dollar. And the U.S. dollar, which came down so dramatically a couple of days ago, has really tried to stage a comeback of sorts. It is lower on the day today. As you can see, it's currently trading down about 21 points, well off of 100. That's where we're pegging current resistance at 98.43. And I want to enlarge this one chart. And this chart that we're going to look at, it is a simple daily chart, but what we have in this chart really of critical importance, let's get the proper pointer up, but of critical importance is this one fib retracement, which goes from October at around 93.70, let's say, up to these highs at about 100. And when we do that, you can see this tremendous fall that we had, and then we had really 2 days of recouping, this being Monday, this being Friday, and this small red candle is today. So we are off a little bit today. That is the reason, of course, that we are showing gold a little bit higher on the day is dollar weakness. Because as I said, with this dollar weakness here, when we look at the true price of gold in terms of what is accountable for trading and what is accountable for a strong or weak US dollar, when we look at the market today, roughly normal trading is giving it a negative sentiment of about 30 cents on the day, but you've got to add $3.10 due to dollar weakness, and that's where we're coming up with this positive $2.80 on gold. So traders, with that in mind, my current recommendation is to obviously maintain our current long position. That's sitting at 77.78, and to maintain our current stop placement. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.